Welcome back to Wrap. Another of the big China stories in our headlines today involves banking. Let's get out to Phil Yin in the newsroom and find out what's been going on. Phil.
Hi, Teymoor. We had a big deal today. China's fifth biggest lender has agreed to sell up to a fifth of its share, that'd be 20% to HSBC, expanding the global bank's footprint in a market hoarding nearly $1.3 trillion in savings. The sale was such a stake worth around $1 billion. That's according to analysts. It would be the largest by a local bank to a foreign investor. As you know, Beijing is overhauling a sector bogged down with more than $200 billion in bad loans. But overall, it's been a good week for HSBC, the world's second largest bank by market value. They also own slices of Bank of Shanghai, Ping An, which went public, as you mentioned a bit earlier. They raised $1.8 billion. Now, though the estimate for the Bank of Communications sale could be worth $1 billion, some industry analysts believe it could command a much higher premium. The bank was founded in 1908. The start of Shanghai's economic heydays, and now they have plans to IPO and are in the process of slashing bad loans and beef up capital this year before an eventual listing. Analysts also cite a number of other reasons, including a stronger loan book dominated by loans to such major industrial firms such as Sinopec, stronger assets than its peers, and better intangible assets such as a strong reputation at home and abroad. Now, as for HSBC, the 20% stake automatically makes them the second largest shareholder. But analysts say that might not translate into a proportionate say in the daily affairs of the lender, which would remain government control. So the real question, Tay, is what kind of control will HSBC have, if any, and are we likely to see more of these deals in the future? Tay?
Well, there's a couple of questions we can put to our next guest. Philip Chan is a research director with Shenwan Securities, joining us from our Hong Kong studio. Phil, the issue of control is an interesting one. I mean, 20% doesn't really give them, it gives them a very large stake, but it won't give them much control, particularly given that the other big shareholder is the Chinese government. So what are the benefits of HSBC spending its money and partnering with something like the Bank of Communications rather than spending the money and beefing up their own presence in China?
Yeah, it's a good question, but it's better for a foreign bank such as HSBC to buy into an existing network, whether it's a large minority shareholding or not. This way, they also get to they get to learn about the processes, say the way banking works locally and. Because really what they're trying to get is the retail customer in the end. So the benefits are there.
Well, you say that they'll get to know how the banking system works in China. Surely the experience so far has been the other way around. What happens is the Chinese take all the expertise from the foreign partners and set up their system on the basis of what they learn from the foreign partners.
That's right. What I meant was that they'll get to know retail customers better. In China, and this is something which you can't just get from. You can get it from obviously building up your own presence in China, but the way that HSBC is doing it is to buy into an existing network. It can't increase the stake dramatically, and it can't increase the network dramatically either, even after 2007. But it gives it a very good foothold in the local market, which is what they want.
Phil here in the newsroom, you mentioned the foothold into the market. You mentioned the learning curve part for HSBC. But what significant changes might there be over the next course of 1 to 2 years from a banking system standpoint with respect to both the government and also both on the ground with the banking system in China with respect to the Bank of Communications? Any differences you see as far as business as usual or not as usual?
No, there'll probably still be changes on the going forward, because remember that the Banking Commission wants to all of the banks to actually improve the capital adequacy ratios, their internal controls, risk management, the internal operations ahead of 2007, and some of the big four are at different stages of that, and Bank of Communications is within that, just outside of the big four. So we expect there will be more regulation coming in, and more say heightened guidelines going forward. But again, this is just going to be on a case-by-case basis.
But people are talking
What's
about this
announced
deal
on
as
it.
being the sensible one, Philip, in terms of the fact that Bank of Communications seems to have better balance sheets, fewer bad loans than some of the big four that you mentioned. And they've also announced a fairly major financial restructuring to try and make that even better. From the financial details that you have seen, are you convinced that they're doing a good job with that?
I think they're doing, as good a job as they can. All of the major banks in China have got their own unique problems, and time. It's going to take time to actually restructure those problems or alleviate those problems, and they're going to have to do it in different ways, and some of them are going to do it faster than others. Yeah. So I think they're doing a reasonable job.
All right, Philip, we'll leave it there. Thanks a lot for coming by and talking to us. Philip Chan is with Shenwan Securities, joining us from Hong Kong. We'll take a short break now and come back and talk about